I'm interested because some of the analysts have written, for example, large but not transformative deals, likely better uses of M&A capital, execution risks. Give us the other side of the story. Why are you convinced this is going to help your revenue, particularly in SaaS, and your ability to service your cloud and security clients?
Well, thank you, Carolyn, and just a pleasure to be on Bloomberg again. And let's look at both deals. On the cybersecurity side with Carbon Black, we believe that the security industry is simply broken. Way too many products, way too many companies in that industry. And what customers want is more security and spending less on security. And for that, we're going to deliver a complete end-to-end from the application across the network and to the endpoint. And this is where Carbon Black helps us, but we're going to leverage its technology across that entire platform. So we really believe we have an opportunity to be a disruptor and a consolidator in that industry. And this is a perpetual top priority for tech, for CIOs, and for boards and CEO offices as well.
Pat,
and on the pivotal...
Go ahead, sorry, go ahead.
Yeah, and on the pivotal side, the number one thing that we see in digital transformation is, can I build and deliver a great application experience? And the pivotal technology, complemented with what VMware is doing in our earlier acquisition with Heptio, we believe we're uniquely positioned to leverage this major transition that's happening around the technology called Kubernetes. And it's as significant as cloud and Java over the last 2 decades. And we're going to deliver a full build, run, manage environment to enable our customers' digital transformation with the best software skills on the planet. So we're quite excited about both of these acquisitions, and our board fully supports us in moving forward boldly in this way. And of course, with our VMworld conference next week, I wanted to take that opportunity to tell the story to our 20,000 plus assembled there in San Francisco next week.
Right, so I sort of understand how Pivotal and Carbon Black sort of fit in together, and then sort of how those pieces will fit into VMware. But some of the concerns being raised by investors are just about the amount of acquisitions and the amount of money being spent on acquisitions. And I'm just wondering, when you look at the current debt load, when you look at your current cash position, do you think that the return on this investment that you're going to get is going to sort of make up for some of those concerns?
Yeah, we're very positive on that. We're spending a little bit less than $5 billion and adding $1 billion of revenue to the company, almost all of which is subscription and SaaS. And if you look at multiples, we'll say, man, this is a steal in comparison to what's being positioned with other companies. So in that sense, $1 billion of revenue for $5 billion capital outlay, feels pretty good. We're also very confident in our ability to accelerate these businesses and turn them profitable, as we've committed to next year. And they fit in our strategy. Now that we can build, run, manage, connect, and protect applications, nobody else in the world can deliver that comprehensive solution. So yeah, we believe we can turn these profitable and make it great for our customers and our shareholders very rapidly.
Pat, do these two deals sort of bring you up to speed with transitioning from legacy IT to the newer tech generation, for lack of a better word that I'll call it, and sort of give you the size and scale that you need to take on competitors? Or do you feel like there are still a few more deals out on the horizon that you need to really compete here in this space?
Well, I'd sort of take it in the last chapter of VMware was really laying out a comprehensive cloud strategy. And this was really ushered in by our major Amazon partnership. Earlier this year, we announced a partnership as well with Microsoft and Azure, and more recently with Google, last year with Alibaba. So we're really uniquely positioned in a multi-cloud, hybrid cloud world. And so that piece of our strategy is now well underway. And we believe these two acquisitions really fill out the next phase of our strategy to help customers build as well as protect those workloads. So it really is building on what we've done the last couple of years. And I think this is the center of our strategy for the next couple of years. And will we do some other tuck-in acquisitions? Well, likely, but we think these are the core assets that we need to operationalize and effectively grow into this next chapter of VMware.
Let's talk about the next chapter and the next chapter for your customers at the moment, because how solid is business investment in your type of software right now? How worried are you about the macro environment that you currently face, considering the dialing up of tensions between China and the United States?
Yeah, and in our Q1 earnings call, I commented a bit of concern on the macro environment. And this was maybe a little bit startling in the industry, because we've gotten a good reputation of having a good visibility into the future. And in fact, on our earnings call yesterday, and given some of the comments today, I was a bit more optimistic that if anything, I think we're seeing a stabilization. Our business in Europe, we actually grew in China, and strong execution in the Americas. And we do believe that technology is in this phase where it is a digital transformation for every business. You know, it used to be that if the business got a cold, tech got the flu. Well, now tech is transforming the business, and in that sense, I view it as wherever GDP is, tech is higher, and well-placed software companies like ours are going to be even better than that. So we see ourselves well above any of the near-term trends, and we're seeing very good business into the future. And as a result, we reaffirmed our guidance yesterday for the second half, so we're feeling pretty good.
All right, so Pat, real quickly, just a little bit more time here. The trade war, all the impact going on with regards to China, how's that affecting your business? Are you worried about it?
Well, I think everybody should be pausing and thinking about this carefully. And the way I framed it is we're increasingly seeing that it's going to be a two trading bloc world. There's going to be the U.S. and its trading partners and China and its trading partners. Both of those will be putting pressure on their suppliers and on the supply chain for those suppliers to align against those trading blocs. And I don't think, given these supply chain issues, intellectual property rights issues, this is not going to change overnight. This is a long-term restructuring of global trade. And I think every business needs to say, how do I participate in both of those trading blocks? And I think every CEO is already working on figuring that out. So today's announcements, I think, are something we're already underway. How do we participate in China? And we're firmly committed to that market. But increasingly, we have to say, how do we participate in the non-China trading blocks effectively? So both of us need to be part of how every company thinks about their go-forward strategy, and we're doing exactly that, even as we have to adjust to some of the near-term decisions by each country.